Hi, everyone, and welcome to the Buffett and Beyond Saturday Market Recap Letter, and this is August 12, 2023, and these methodologies are based on the book Buffett and Beyond, second edition. And for those of you who want to get our daily letter and also the names of the stocks in our portfolios, just go to buffettandbeyond.com, sign up for our 2-week free subscription. All we need is your email, and then you'll get 2 weeks of letters actually every day except Sunday, and 3 on Saturday, 3 videos on Saturday. So, okay, folks, go sign up for that 2-week free subscription. You'll get everything. And remember, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And let's go over the market recap for this week. Well, the market had another week of going nowhere, except down a little bit, as the CPI and PPI numbers came out, and the CPI was tad better than expected, and the PPI was a tad worse than expected. So they kind of average out, I guess. So here we sit waiting for the retail companies to report their earnings this coming week, which should be a blockbuster, folks, because that has been the segment that has been lagging the rest of the market. And most of these retail stocks have also been lagging the market, as well as the ETFs, which we're going to look at in our ETF letter. The weekly stock analysis video, Palo Alto is the right stock in the right industry. Cybersecurity is a must for all companies, and it took a hit last week because Fortinet missed by about less than 1%, and so the stock just got hammered, and Palo Alto fell along with it, and we are looking at buying this stock, and we have been in it this past week. Now, our ETF video, we're going over the top stocks in the consumer staples ETF and the retail ETF, and that's what we're talking about, which stocks have been lagging the market. But we also go over the returns of the best performing ETFs over the past 5 years and their returns, as well as the top stock returns in those ETFs. In other words, what we are doing, or what we are saying, is that should you really be in the consumer staples ETF or the retail ETF when there are other ETFs that are doing so much better and have done better over the past 5 years? So let's get right to it, folks. And let's look at the S&P 500. The top red line, the bottom red line are volatility bands, and you can see the S&P 500 is all the way down to this bottom band, and this coming week is going to be very, very telling for the market. And when we look down here at the intermediate term indicator, it is pointing nowhere except down. And then when we look at the QQQs, we can see the QQQs seem to be more aggressive in pushing this bottom line down. Now, I forgot to mention, the line in the middle is the 20-day moving average. So we broke through the 20-day moving average on both the S&P and the QQQs, the NASDAQ 100, and it pushing that bottom line down. And as you can see down here, we are oversold, but we have a long way to go, maybe. So it's going to be very, very telling this week. But this is not a good signal with the QQQs themselves pushing down on this bottom line. Got to be very, very careful in here. And when we look at the Dow Jones, well, this green line here is the 20-day moving average. Now, remember, the QQQs in the S&P 500 are down below their 20-day moving average, but the industrials are hanging in there, and they have been testing this 20-day moving average. And look up here. This is actually a short-term buy signal. So where the QQQs and the S&P 500 are looking terrible, the Dow is actually giving us a short-term buy signal in here. And it certainly worked on Friday when the market was up over 125 points. I took this chart just a few minutes before the market closed, but up over 100 points, and we have this little buy signal in here. So the indices are all mixed up. Again, the intermediate term indicator is pointing down over here, so we just have to be very careful. Can this market come down and test its 50-day moving average? Sure. But if this happens, then the QQQs and the S&P 500 will have another fall in here. And by fall, I mean not autumn. I'm talking about it might decline for a while. So you got to be very, very careful in here. Long-term stockholders just walk away from this and let happen what's going to happen. You short-term folks, you got to be very careful, because one indicator is saying, or one index is saying, hey, we have a short-term buy signal here. And this buy signal can last 1, 2, or 3 days, and maybe Friday was the day, and we want to see this line actually get ahead of this line. That would give us a much better feeling in this. So right now, we're waiting, folks, with the retail stocks coming out this week. It's going to be very, very interesting. And also, John Deere is coming out with their earnings now. They are not in the Dow 30, but Caterpillar is, and Caterpillar already came out with their earnings. But if the Deere earnings are good and that moves the stock up, that might also cause Caterpillar to move up, and that would help the Dow an awful lot in here. So, folks, we just don't know what's going to happen this week, but boy, oh boy, it's going to be very, very interesting. And when we look at the SPX or the S&P 500, we can see it broke down below its 20-day moving average and now sitting on the 50-day moving average. Folks, we really don't want to see a break of this 50-day moving average. If it is, we're going down to at least 4,400, because you can see there's a line in here. And if it breaks through that, then we're going to see some action to the downside. But we were talking in our daily letters about a possible formation here of a bullish move. Problem is, this line right here did not turn up. You see this space right here? Well, the market went flat in there to slightly down, and to get a buy signal, we have got to get this line to move up and move up past this point. So technically, looking at the market, very unsure of what it's doing, sitting on that 50-day moving average. We do not want to see a break of the 50-day moving average in the S&P 500, and the intermediate term indicator is certainly pointing down. Not oversold yet. That means it has room to run to the downside. So very, very careful in here. There's some other support lines that I'm not showing here further down, and we really don't want to see that. We would like to see this market stop right at this 50-day moving average, and this coming week in the retail sector, we'll see what happens. Portfolio protection, yes, we have 3 puts. Now, this is for about $135,000 portfolio, so therefore we have 3 SPY puts, and we stagger them out. And right now they're about 7% below the present level of the market. So if that 50-day moving average should break on the S&P 500, then we would probably see these puts start making money. So we'll see what happens, but we're protected about 7% below this market. And a lot of you are fully protected because you bought more of these puts depending on your portfolio side. So therefore, put protection. And I was asked this week, what is put protection? What are puts? What are calls? Well, it's a whole industry within itself, folks. But think of portfolio protection on puts. Think of the insurance you have on your car. Think of the insurance you have on your house. And on your car, you have a deductible. In other words, if your car is worth $30,000, the insurance will probably cover, $28,000 of it. You have a $2,000 deduction. That's the same way these puts work. So about 7%, a little more than 7% below the market, you will be totally protected for any kind of fall after that, as long as you have enough puts in your portfolio protecting the size, and that depends on the size of your portfolio. So folks, we had the past 2 weeks just a little bit weak in the markets, and everything is readjusting. The tech stocks have fallen a bit off their highs, and the Semiconductor stocks have fallen off their highs. Let's see if the retail stocks can pick up that slack and start giving us some movement back to the upside in the market. But right now, we have to be very, very careful. So, hey, it's the weekend. Go out, enjoy it. It's summertime. A lot of people are not even looking at the market. Can't even blame you. Go out, have a good time. Be safe. Be with your family. Be with your loved ones. And folks, we'll see you back here on Monday.